Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we're going to take a closer look at an idea that has recently been circulating among observers of Iraq's financial system and among followers of the Iraqi Dinar. The claim suggests that by studying the government's actions, rather than simply listening to public statements, it appears that Iraq could be getting closer to a change in its currency rate. According to this view, the formation of a stable government is seen as the key factor, or what some have described as the linchpin, that could potentially influence any future change in the dinar's exchange rate. To properly understand this claim, it is important to step back and analyze the broader context of Iraq's political and economic structure. Iraq's currency policy is not determined by speculation or isolated political developments alone. Instead, it is shaped by a complex set of institutional decisions involving the Central Bank of Iraq, the Iraqi government, fiscal policy, monetary policy, and the overall stability of the country's political system. When analysts discuss the importance of government formation, they are usually referring to the process of establishing a fully functioning cabinet, approving budgets, and creating policy alignment between the legislative and executive branches of the Iraqi state. In Iraq's system, political stability plays a critical role in economic planning. When a government is fully formed and operating effectively, it can pass budgets, implement economic reforms, negotiate international agreements, and coordinate with the central bank on financial policy. Without that stability, economic reforms tend to slow down or become uncertain. This is one of the reasons why observers sometimes link government formation with broader financial developments. However, it is also important to clarify what is meant when people talk about a rate change for the Iraqi dinar. In economic terms, exchange rates are influenced by a country's monetary policy, foreign reserves, trade balance, inflation levels, and economic confidence. The Central Bank of Iraq manages the dinar under a controlled exchange rate system, and its primary objective is maintaining monetary stability. That means any decision regarding the exchange rate would likely be part of a carefully managed financial policy, not a sudden or speculative move. The idea that government formation could influence currency policy comes from the fact that fiscal policy and monetary policy often need to work together. A stable government can approve national budgets, allocate spending, manage oil revenues, and pass reforms that strengthen the banking sector. These actions create a stronger economic environment, which in turn gives the central bank more flexibility when managing the national currency. When analysts examine actions versus statements, they are often referring to observable policy steps. For example, when Iraq moves forward with financial reforms, strengthens its banking regulations, expands digital payment systems, or improves transparency in its financial sector, those are concrete signals that the country is working toward long-term economic stability. These reforms are often supported by international financial institutions and are part of a broader modernization process. Over the past several years, Iraq has been working to modernize its financial infrastructure. This includes reforms in the banking sector, anti-money laundering measures, improvements in electronic payments, and stronger integration with international financial systems. These steps are designed to improve economic confidence, attract foreign investment, and reduce dependence on cash transactions. In that context, political stability becomes a key component of economic reform. When the government is stable, it can implement long-term development plans, including infrastructure investments, energy projects, and financial sector modernization. These projects are essential for strengthening Iraq's economic foundation. For followers of the Iraqi dinar, discussions about government formation often create speculation about whether political developments could lead to currency changes. While it is true that political stability can support economic confidence, it is important to remember that exchange rate decisions are typically based on a wide range of economic indicators rather than a single political event. In practical terms, a stable government allows Iraq to pass its national budget more efficiently. The national budget is one of the most important economic documents in the country because it determines how oil revenues are distributed, how infrastructure projects are funded, and how government spending is managed. When budgets are delayed due to political disagreements, economic planning can slow down. A functioning government also allows Iraq to negotiate international financial partnerships more effectively. These partnerships can involve development loans, infrastructure investment, and technical cooperation programs that help modernize the economy. International investors generally look for political stability before committing long-term capital to any country. Another important factor is the relationship between fiscal policy and the Central Bank of Iraq. While the central bank operates independently, coordination with the government is often necessary when implementing broader economic strategies. For example, fiscal discipline and controlled government spending can help support currency stability by reducing inflationary pressure. From a short-term perspective, the formation of a stable government may improve confidence in Iraq's economic outlook. Markets and international observers tend to view political stability as a positive signal. When institutions function smoothly, it reduces uncertainty and allows policymakers to focus on economic growth and reform. However, it is also important to understand that short-term political developments do not automatically lead to immediate currency adjustments. Central banks typically evaluate long-term economic indicators before making any significant changes to exchange rate policy. These indicators include foreign currency reserves, inflation levels, oil revenue stability, and the strength of the domestic banking system. For Iraq specifically, oil revenue plays a central role in the economy. Oil exports provide the majority of government income and foreign currency inflows. Because of this, global energy markets and oil price stability are important factors influencing Iraq's financial system. Strong and stable oil revenues allow the government to fund development programs while maintaining healthy foreign currency reserves. Foreign reserves are particularly important when discussing currency stability. A country with strong reserves can support its currency more effectively and maintain confidence in its financial system. The Central Bank of Iraq has historically focused on maintaining adequate reserves to protect the dinar from volatility. In the long term, Iraq's economic future depends on diversification beyond oil. Many economic reforms are aimed at expanding sectors such as agriculture, manufacturing, transportation, and technology. A more diversified economy reduces vulnerability to fluctuations in global oil prices and creates new sources of economic growth. This long-term diversification strategy is one reason why financial reforms often take time. Building a strong and resilient economy requires improvements in infrastructure, education, financial institutions, and regulatory frameworks. These changes cannot happen overnight, but they gradually strengthen the foundation of the country's economic system. For those who follow the Iraqi dinar closely, it can sometimes be tempting to interpret every political development as a signal of an imminent currency change. However, professional economic analysis requires a more cautious and balanced approach. Political progress, including government formation, should be viewed as one piece of a much larger economic puzzle. Analysts typically watch several indicators when evaluating Iraq's economic trajectory. These include the stability of the banking sector, progress in financial reforms, improvements in transparency, the level of foreign investment, and the government's ability to implement long-term development strategies. Another area that observers often monitor is the modernization of Iraq's payment systems. Expanding digital payments and reducing reliance on cash transactions can improve financial transparency and strengthen the banking sector. This process also helps integrate Iraq's financial system with international markets. Improving financial transparency is especially important when working with global institutions and investors. Countries that demonstrate strong financial governance are more likely to attract international partnerships and investment flows. These investments can support economic growth and create jobs across different sectors of the economy. In addition to financial reforms, infrastructure development plays a key role in Iraq's economic strategy. Investments in roads, ports, electricity networks, and transportation corridors can improve trade and logistics. Infrastructure projects also help stimulate economic activity by creating new opportunities for businesses. When all of these elements come together, political stability, financial reform, infrastructure development, and diversified economic growth, they create an environment where economic confidence can gradually increase. This is the type of environment that policymakers aim to build when planning long-term economic strategies. From a strategic perspective, the formation of a stable government could accelerate some of these reforms because it allows decision makers to move forward with legislation, budgets, and development plans. It also reduces uncertainty, which can be beneficial for economic planning and investor confidence. However, it is important to keep expectations realistic. Currency policy decisions are typically cautious and carefully managed. Central banks prioritize stability over sudden changes, especially in economies that are still undergoing structural reforms. For Iraqi Dinar observers, the key takeaway is that political progress can support economic stability, but it does not necessarily mean immediate or dramatic currency changes. Instead, it should be viewed as part of the broader process of strengthening Iraq's economic institutions. Over time, consistent reforms, stable governance, and strong economic management can improve a country's financial position. When these conditions are present, they create a more favorable environment for sustainable economic growth and monetary stability. This is why many economists emphasize the importance of watching long-term trends rather than focusing solely on short-term speculation. Economic development is a gradual process that involves careful policy decisions and structural reforms. As Iraq continues to rebuild and modernize its economy, observers will likely continue monitoring government formation, financial reforms, oil market dynamics, and international partnerships. Together, these factors provide a clearer picture of the country's economic direction. For followers of the Iraqi Dinar, staying informed through credible analysis and verified information is essential. Understanding how political stability, economic reforms, and monetary policy interact can provide a more realistic perspective on Iraq's financial future. As always, our goal here is to provide balanced and responsible analysis that helps viewers understand the broader economic context surrounding the Iraqi Dinar. If you want to continue receiving factual and responsible updates about Iraq's economy and the Iraqi Dinar, make sure to subscribe to the channel and stay connected for future analysis. And as always, please remember that this content is provided for informational purposes only and should not be considered financial advice.